Yeah,
There
good
you go.
morning, everyone. Welcome. A little pre-market session with Fabio and I. Just wanted to look what price is doing after Friday's sell-off from last week. No surprise, it was month end, quarter end. So we have a fresh kind of view of the market coming into this morning. But we're always looking like with a fresh mind, I think, whether it's month end, whether it's weekend or new week. For me, doesn't matter. We're day traders. We're in and out within a few hours or by end of day. So the bias is always neutral until we hit the charts. Uh, New York opening, futures opening. So that's always how I look at it. Like, what do you think, Fabio? For me personally, whatever happened the previous night, things can always change. There could always be some news event. Volume could kick in at a different angle. I always look at a different bias because I felt like I always got myself in trouble if I saw a strong trend the other day and I felt like this trend had to continue, and I would always add into that bias without looking at the exposure, the volume, see what's happening, see if it could have flipped. So for me, I always go into the markets with a fresh mind, and that always helped me to manage my trades.
Yeah, and I think it's different when you're day trading rather than when you have like a longer term view, right? So
Yeah,
for you, every day is different. So one day could be
yeah,
long, one day could be short, right?
yeah, and that's the beauty of it. Yeah, of course, it depends on everyone's lifestyle, whether they want to hold longer term, shorter term. For me, I always felt I was most profitable shorter term. Close the book, enjoy the rest of my day. I don't have to stress about what's happening in the market. But of course, everyone has their own method, right? We're not here to so much teach a strategy, more so just to jump on our shoulder, see how we look at the market, see how we manage it. Remember I said in the past that I don't like so much the term as a trader. I like more so to look at it as like an elite profession, as a manager, portfolio manager, money manager. Because once you gain that edge of how you look at the markets in that way, in a more professional setup, then I think that's the edge right there.
Yeah, so I think for we have a lot of new people in the group. So I think what is very interesting is to understand, like, you probably have a routine that you put up in the morning, and
Mm.
so how do you get set up, and how do you kind of like plan your week, your day, based on the data that comes out? Again, I think that would be very helpful because yeah, we have new traders and they were like, okay, so how can I look at the levels? How can I look at the data? How can I put them into my strategy? So yeah,
Yeah, of
would
course.
be great.
Yeah. Well, the first thing everyone needs to look into is time. What is going on with the day, right? Like, because it's all about timing in the market too. You can't just be blindly entering bids when there's a big news event coming in, or when there's or right before New York Open, because of course New York Open comes in, there's a big volatility spike and you could get stopped out if your risk is too high or if your stops are um too like thinly positioned. So like first thing we look at what's going on time wise. It's the events. We have ISM today at the 1 hour close, half an hour after New York Open. There's obviously going to be a volatility push right there. So give it, sure, you can enter in a position well before, see how the market moves. But my number one rule is if I'm in a position, at least, like, let's say if I spread my bids out 10 times, 1 to 1, risk reward, whatever. So I have plenty of room to breathe. And my position is at break even or at a small loss before, for example, like an ISM pop, I'm out. There's no way I'm risking my capital during uncertainty because we could easily get a wick on both ends, and we could and get like a few minutes of like nervous candles until the major move occurs. Sure, we could get the sell off right away, but so many times we see a couple of reversals. Mark has to settle for a few minutes, and then we get the major move. So for me personally, my rule is if I'm at break even or small loss before a strong volatility push, like ISM that's going on this morning, I'm out. I always want to protect my positions. I always can get in later. There's always going to get a retest. There's always going to be a retest of you can draw out the support resistance candlesticks, or like what we like to do more professionally is the exposed areas. So right now, what I'm seeing, market is just trending. It's been consolidating after Friday's sell-off, strong sell-off. Right. I just kind of labeled this box out here. We had strong exposure. Not only did we have the like the call resistance, the gamma wall up here, we also had the 1-day max. The 1-day max, as Fabio labeled out clearly as well, all three got rejected. And look at the sell-off that happened. So this is the first thing I look after. Boom. Look at this. Strong sell-off. Mark clearly wanted the push after Michigan, clear fake out into these strong levels. Boom, sold off. And now we're kind of consolidating into this range. And we clearly couldn't really see a reversal. So that's another thing too, like where we get a sell-off and then pre-market Sunday, Monday morning, London, we start seeing a bit of a push and market wants to recover. We haven't seen it recover and now we're consolidating. So that's the first thing we look at. Time and what we did previous day. And it was a clear sell-off for the previous day. Strong reaction there from the reaction zones. And we had I think on all, because I look at ES, I look at SPX, and I look at SPY on S&P because I want to see in all three levels because it's really important because those levels are a little different. So for example, let's look at SPY right now. You see SPY levels are giving us a different picture. So for me, I like to filter out the major levels. So we have the tier 1 levels here, all the 0 DTEs, all the gamma walls, and then I throw in like a GEX one as well, just to see if it's relevant. It's obviously relevant here because we bounced from it previous day on Friday. Boom, right here. So I left that there just to see what's going on, at least on the SPY. We're below the high volume level. And yeah, so we're just kind of stuck in a range after yesterday's sell-off. So to see a continuation and possible move down to the put support is high probability, of course. But for me right now, I'm just kind of watching the markets, possibly enter maybe after New York, well before ISM. But now that I'm seeing that we have the ISM news coming out, I want to be patient. Because we're definitely going to get some volatility once that newsprint comes in. So just for me, I'm just completely neutral. My broker's open, no positions. Also watching the VIX. The VIX is up about 3.5%. So that's obviously an obvious strength with that inverse correlation there. So that's another indicator too. So see what the VIX is doing pre-market. Market's kind of trending and continuing. I guess you could say a bear flag formation, whatever you call it, from yesterday or from Friday's push down in correlation with the VIX being strong. So that could be an idea as well. Then I'll bring up the NASDAQ as well. See what's going on. Put in the levels on NASDAQ. Either way. Yeah, so NASDAQ's just kind of trending below the gamma wall here. Its put support is well below comparatively to S&Ps. Yeah, it's a strong down. We can definitely get that strong down, especially after a strong news day. I'm watching the VIX. I'll pop open the levels on VIX. Give me a second. Okay, so sometimes what I do, I just draw out these areas before putting on the levels just to see kind of just based on price action. And then once I get the levels on, then I match it up with the levels. And that's kind of like one good way to do it to see if it aligns with your or kind of like your retail bias. And then once you put on the levels, and that's the institution bias. And that's kind of like extra confirmation of where price can easily move towards. Because that's another important thing with these 0 DT levels. They act as magnets, right? So that's why like another way to do it is put on alerts. see how price moves towards them. Look at the S&P. That's our strongest confluence. Check back at the VIX, see what the VIX is doing around the levels, and then create a bias. And also always remember, before entering in a bid, you need to always measure what your risk level is and how much risk you're putting on, because you can't always just figure out where you want price to go. You also need to measure out where price can go against you and where it would make sense for you to either start de-risking, set your stops, or start hedging. But hedging, I wouldn't advise, since that's a little more complicated and you need lots of margin for that as well. But that's what institutions do all the time, right? There's different tools you can use to hedge. Of course, in the options market, it's a little more complicated. I know in futures, you're not really able to hedge, which is why I use my CFD brokers. I have a lot more flexibility, especially with my risk tools. So it's just all depends. But of course, to keep it simple, just set your risk, set your stop in areas that make sense, as well as your take profit. Like both sides always have to make sense.
Can you share like how do you, for example, plan your stop? Like how much risk would you take per trade? Things like that. That would be very helpful.
Yeah, of course. Yeah. So let's look. Let's look for example. Let's look the ES. Let's see if I was kind of devising a plan here. ES, but like ES, we're kind of trending above this kind of like flip zone here. Let's give like a live example. I'm kind of looking at like, for me, let's say for ES, let's say you're targeting the put support. Let's say it made sense. VIX is strong. NASDAQ starts giving some weakness. We look at some live data, live volume as well. And you're like, okay, my idea here potentially maybe is the short. We keep breaking down. We were never able to, let's say, make a new high either after that strong sell-off from Friday. And then your let's say your target is the put support. So because for me, for example, my risk is always the strong levels as well as my take profit zones, which have to make sense on both sides. So let's say the put support 0TT is a target here. So then I say, okay, if it's a target, where would my stop be? I look at the yes level, the 1 day max can be used as a strong like repelling zone. These areas repel quite easily, especially if, let's say, the initial move, the major move would be, let's say, one, because it's pretty rare, right, Fabio, that we see like both the 1 day min and 1 day max to get hit, right? It's either one or the other if we're seeing a strong trending day.
It does happen that sometimes, like we saw
Sometimes, of
Friday,
course, yeah,
where we hit the max and we went all the way down. I don't think we hit the minimum, but
yeah.
quite a strong move.
So that could be an idea. So let's say here on the ES or the SPY, let's look at the SPY. Let's look at the SPY. What exposure we're getting on the SPY. So same thing here on the SPY and the ES, the 1 day max is in similar areas, right? So let's say I'm getting in like a short idea and I want the trend to continue down, want to hit some put support. I put my risk at the 1 day max, always 1-to-1. So let's say I'm able to get to like a 1-to-1 area around here. So then for me, if price like starts, let's say, trending up, I start adding into my shorts up here with conviction. Or if, let's say, I missed the move, but the thing is, usually when price likes the trend or like to target little areas, I get at least a 1-to-1. If it moves greater than 1-to-1, then I'd be patient, see what's happening. And then if I miss the move, I miss the move, and I look at maybe I possibly look at NASDAQ. So it's kind of like an idea for me. So the reason why I go 1-to-1 is because I have plenty of room to manage my trade. That's the whole purpose here, is that we're risk managers. We're not going in the fucking, sorry for my language, 1 minute or 30-second and looking at patterns. So many times I see it, Fabio, online. I don't want to call out any people online on YouTube where they're zooming on the 1 minute. They're basically purely just putting their analysis full on candlesticks, and they see a pattern on the 1 minute. And they're like, oh, this looks like a reversal pattern, not knowing where we are, what exposure we have, what the trend is. And they add in, let's say, a certain amount of risk, and they're putting their stops below the previous candlestick. And you see, and like we're all guilty of doing that in the past. We're all guilty. Once you're able to just zoom out, and like I'm rarely on the 1 minute or even the 5 minute. For me, the 15 minutes good enough. I don't care so much about the candlesticks until I'm in a position and I'm starting taking profit. Let's say the bias is correct here, starts going down to the put support, and then hits the put support, maybe then I start looking to candlesticks, see if we get a reversal or we get strong push to the upside and I close my position completely, or I start trailing as well to manage that. So just to make sure I remain in profit. And yeah, because we could easily reverse and start trending up and start breaking highs. And the end of the day, all of a sudden we're at new highs and the trend completely flipped. So that's why I need to I have to either trail it or start taking profit once it hits my zones, because the market can reverse at any time and it doesn't have to continue. It can continue to the 1 day min and I can kick myself. We can, like, let's say hit the put support, kind of start trending here for about half an hour. I look at it, be like, you know what? I made my profit, made my risk, stop me out, and I'm done for the day. And look at the charts an hour later and see that I hit the 1 day minimum. I could easily hit a 2 to 1. But the key here is to know that that's not always going to happen like that, right? We're not always going to pick the tops and pick the bottoms. And once you get over that factor where it hits your zone and you're comfortable taking profit and you're able to call it a day because, it just consolidated for too long or started reversing on you and close the book, then that's the key right there. You're never going to be able, because the volume can kick in at any time. No one knows when the real volume is going to kick in, when that second major or that third major move happens. For me, I just like to catch the first, possibly the second, and just be done and create that freedom for myself. So that's just kind of an idea right there.
Mm-hmm. Yeah, that's
where the risk parameter in that risk area where price comes to, it has to make sense. It has to be a strong level. Like I'm not putting like a GEX 5 there, or I'm not putting, like, let's say a 1 hour pivot or a daily pivot. Sure, I can put like a daily pivot there, but it always has to be an area where it would make sense for price not to go towards, especially in the early AM. It can easily bounce back and hit the 1 day max later on. But for it to hit it now, let's say if I had a short bias, it would have to be in line with everything. So yeah, so just watching the market. Clearly, we're in a short-term downtrend, short-term bearish move right now. Whatever you call this, a bear flag. I'm not big into patterns, but if you are, then it would make sense. So let's see what happens. VIX is kind of lining up with the levels we drew out. Looking strong this morning, up about 4% now. A lot of times I look into the M7, see how they're reacting, see if there's any big news. Apple's kind of like same bearish flag, downtrend comparatively to S&P. Yeah, Microsoft, same thing. Google, same thing. Amazon, yeah. So like the Meg 7 basically have like the same price formation as the S&P. So no major divergence, no gap up or gap down. And then we have Tesla, of course, which is no surprise. Tesla is doing something completely different. I had the strong sell-off on Friday, and now it's recovered.
Yeah.
It's price action. So, but as we all know, Elon Musk and Tesla, they are their own beast.
Do you ever trade like single stocks or not much?
No, for me, they're more so just long-term investments. And I use stocks just for passive income, like dividend payouts. But that could be a conversation for something else. So
yeah.
So for me, whatever I make in trading, I use to redeploy into other areas of passive income. So that's my whole goal here. Yep. So like I'm not really, so the only dollar amount I put in my pocket is to pay my expenses, of course, a little entertainment, and then majority of it the rest of it I'm putting into either stocks that give me 5 to 6% dividend payout per quarter, per annum, or investment plans, REITs. I don't know. There's a bunch of ideas out there. If we can always have a subject about that as well. But that's the goal here. Trading shouldn't be to put money in your pocket and to completely blow it on entertainment or whatever. It should be used to redeploy into other investment strategies to create that freedom for yourself. So of course, if you sell the 9 to 5, your 9 to 5 is there to pay your expenses, help you out on that end. Of course, pay your rent, pay your mortgage. That's the whole purpose of it. And the trading should be used to redeploy into the other investment strategies.
And how do you handle those days when maybe you are at a loss and you're not able to get back? Like, how do you, from an emotional standpoint, which is also very important because trading can get very emotional, and
Yeah, of course.
sometimes that's like the most dangerous part of it. So
Yeah.
do you have like a daily goal or daily limit that you set for yourself? How does that work?
Yeah, like for me, like I've traded long enough where I know, let's say, I don't know, let's say my daily goal is to make around 2K and then I shut it down. And then my daily loss is about, let's say, around 5K, because it gives me plenty of room to either make it back that day, hedge or whatnot. And let's say if I hit that 5K, but I know my track record long enough where my winning days um outplay my losing days by high amount. So I'm able to make myself back that amount. If let's say my analysis is completely wrong and I hit that 5K, boom, I'm out. Let's say that's always my goal, because I know I can make that 5K easily back in a day or two. If I can make that loss back in a day or two, I'm fine with it. But I'm not my statistically, probability wise, you guys see I post my trades every day in the chat. I'm not hitting that 5 day loss probably more than maybe once every few months. If you're hitting, let's say, that 5K loss once a week, then you need to like kind of re-strategize your whole mindset, because that's not healthy. But that, like, let's say that 5K loss max is hit maybe once in a blue moon, once every, let's say, quarter, once every 6 months, then that's easily attainable. But if that one key loss, and if you know if you don't have like long enough track record or experience, to keep that like that amount, like, yeah, if like less than that, then that's not a healthy way to trade either. So like I always try and stay away from like New York lunchtime. I don't like to trade past that. I only trade past it if I'm still holding a position while in profit, but I would never hold a position in loss longer than a few hours. If something's like really going wrong with my charts, maybe I got the levels upside down, I don't know what's happening, but I've traded long enough, Fabio, where I admit I had like that one 5K day. I think it was back in December, low volatility, high spread. I don't know, something was going on with my mindset, but it doesn't happen to me too often. Honestly, I've been trading long enough where I can manage my portfolio and I can bring myself back easily, either to break even or to maybe like a 1-2K loss. But if I hit that 5K loss, that's once in a blue moon. And I know I've traded this market long enough where I see the cycles, I see the moves, whether it's summertime or whether it's like middle of Q4 when the volume kicks in. For me, it's all the same for the moves, because I always measure my risk based on the levels.
Yep.
And based on the movement of whatever the exposure gives us. So let's say like SPY gives us similar formation now and like moves down about 0.5%, and it gives us a similar type of setup or formation 3 months from now when the volume is going to be greater and it moves down, let's say 1%. My risk is still the same in dollar amount. So because my risk is same in the dollar amount, I don't care how far it moves tick wise. That's how I always protect myself. It's always in dollar amount. So, and that's how I'm always able to customize it. The lot sizes on the CFDs. I know futures is a little different. It's based on ticks, but that's why people, if they're trading full contracts, they should maybe just go into the minis so they're able to adjust their risk a little better, especially if we have like high volatile days and we're getting it. Yeah, we're definitely gonna get a bit of a push in about 40, 30, 35, 40 minutes with the ISM. So yeah, let's see what happens.
Mm-hmm.
It's all about setting your risk in dollar form, not in tick form, because every day is going to be different.
Yeah.
Sorry, net tick in points.
Do we have any question from the team? We are about 6 minutes from the open. Yeah, you can unmute yourself if you want, or you can send it in the chat, and then we can reply to that. So we have a question from Marta. If you are using tick or volume charts, you probably
No,
don't tick by tick, but do you use volume or do you use volume indicators?
I don't use any volume indicators, and I would advise not to on TradingView because yeah, they're just based on candlesticks, not the actual volume itself. Of course, it can be used maybe to look at divergence if it's making a new low, and is the candle volume or is the candle strength greater than the previous candle you could use, but personally, I don't use that. I would sometimes go into Rhythmic and look at the volume, look at the time in sales, or look at the time and sales on like the ETFs as well that you can do on Webull. But I found that it sometimes gets too distracting because you really need to watch it closely. Especially when you're looking to a setup and just kind of watching the volume at a certain level, it just sometimes can be a little distracting. And I found because my risk is spread out so much, and I always leave myself plenty of room to run where it's not going to fold on me within minutes. I don't look too closely on volume. Only when it's decision time, possibly when I'm taking profit. But when I'm looking into a setup, I don't. But I'll possibly use it a little more once I'm looking to like start taking off of my position. And it's like the strategy comes when you're live into a trade, not when you're looking at the setup. The real strategy comes is when you have the money on the table, you're risking, and let's say you spread your bids out 5, 10 times and you're all in on your 10 bids, but at the same time, like let's say if price is moving up against me, I'm not adding in my bids 10 times. I'm adding in my bids 10 times once I'm able to get that confirmation of the flush. Maybe put on 50% in this area and then start adding in once I get confirmation, and then maybe start looking to volume once I'm into profit. But usually I'm zoomed down to 15, 30 minute, 1 hour. Uh, and then once I implement my trailing strategy, then I can put on the 1 minute. That's the only time I put on the 1 minute. The trailing I use is either the ATR or the 1 minute smooth moving average. I found is very helpful. But only when we get the strong impulse. So when we're consolidating, there's no point. There's too much tangling going on right now. But if we get like a strong move to the upside, then I always found that the 1 minute smooth moving average can be a strong indicator to trail.
Mm-hmm. Interesting.
Yeah. So yeah, now we wait. Get New York open in a few minutes, and then we get ISM in half an hour. So I won't be here for the ISM, but yeah, let's see what we get.
Yeah, see what we're getting.
Yeah. So far, yeah, we're short-term bearish, but medium, long-term, we're bullish. Price is still near all-time highs, pushing higher. So I'm completely neutral right now. And that's the beauty about the market. I'm not too emotionally attached with any certain move right now. We're kind of stuck in between a range on the ES, on the NASDAQ.
So what gives you like a confirmation? Like when do you start like what would you need to put in a trade right now? Or like what would be kind of like the things that you look at?
I might just wait for the reaction on New York because, like I said, it's all about timing. If we didn't have ISM coming up half an hour after, I might be looking at it a little differently. But because we have ISM, a little volatility spike, I think it's just better to be a little patient. I could add in maybe a few bids. I can't say whether long or short. It's no financial advice, you guys, but I would have to see how certain levels are holding. Like NASDAQ right now. Yeah, like NASDAQ. It's interesting how like the 1 day max is above here. We got the put support. Like we definitely could take out the areas below and set the stop up there, but really have no confirmation just yet. The VIX hasn't really given a move just yet. Maybe we can wait till VIX kind of like pulls above this area. Watch the DXY as well. See the DXY can make new highs. So I'm right now for me, Fabio, I'm just watching the VIX.
Yeah.
Watching the VIX and seeing if NASDAQ and S&P can remain below these levels. Remain below the call resistance on the SPY. Yeah, see, it's pushing up right now. Remain below the high volume area, 0DT. I always bring up the 0DT levels because those attract price a lot stronger, especially in the short term. So, yeah, no entries for me right now. Yeah, nothing right now. Just watching. Go to New York Open.
$9.30.
Yeah, off to the races.
Mm-hmm.
Sometimes you can just set alerts. So I'll set an alert right here. See if we can reach that area on the SPY. Look at the ES. Set an alert down here. And just wait and just be patient. These are the best times. When we haven't really reached or broken any strong gamma walls or zero DTs. I just set the alert and that's it. And I just be patient. Why would I rush into a trade right now? Right, Fabio? Why?
Yeah, of course. And as Patrick says, let the market come to you, and there's always new.
Yeah, of course. Watch what the Nasdaq is doing. See what the VIX. The VIX right now is in no man's land. A lot of times too, if you watch the VIX, once the VIX like comes into these areas, the volatility really likes to increase. I noticed. Yeah, just be patient, and that's it.
Mm-hmm.
A lot of the times I like to bring up here, let's bring up the SPX. Because SPX and NDX, they have little gaps they like to fill as well. And I found too, yeah, like the options flow and data is very important to look at as well. Let's bring up the NDX. Bring up the NDX. I'm just going to filter out some levels, see what's more important. Also remember, it's important to like watch the training videos from MenthorQ because each level has different indication, different validity. So it's important for everyone to like watch the training videos or kind of just map out these areas, do some back testing, and see how they react because they're all different. See what NDX is giving us. It seems like from Friday's pre-market, or sorry, from Friday and today's pre-market, NDX is getting rejected off the put support. That's why it's always important to bring up these I think all three for NASDAQ, like futures, CFDs, and ETFs. But I was gonna ask you a question, Fabio. Which asset class would you say brings in the most options volume? Would it be the ETFs, the futures, or CFDs? Would you say?
So I would say the biggest volume are obviously SPX.
Yeah.
Then we have QQQ, and some of those ETFs have a lot of volume. And then you have the top, like the top companies like the Tesla, the Nvidia, those have a very high volume. And then, yeah, the futures are, I mean, they definitely have less volume than like the ES options have less volume than the SPX, but they are
Yeah.
becoming very, very important. So, and the reason I think it is because it allows greater flexibility. So you can trade 24/5. So you can actually play those events that happen before market with futures options.
Yeah.
And you can also play like, the commodity market. So if you are more in the macro side, you can also kind of like play, like gold or crude oil. And you can't really do that efficiently with ETFs because
Mm-hmm.
of the way they're structured. So I would say that future options are going to become very, very important going forward. And we're going to see probably growth in that volumes.
Mm-hmm.
But again, yeah, the SPX still is the most important flow that we have. So, everybody's watching zero DTEs on that.
Yeah.
And it's attracting a lot of like, different type of investors. So not only the directional traders are watching at SPX, but we do have a lot of
Mm-hmm.
people that are doing spreads, um, which is also like another strategy.
Yeah. A lot of strategies out there, but the main focus with these strategies, end of the day, everyone's strategy has one end goal, and it's to make profit.
Yeah.
Like that's the thing. Like you shouldn't be copying anyone else's strategy. Just everyone has a different like lifestyle as well, and like timing the market, how long they can hold, how much risk they can put in. But it's all risk management. Honestly, that's all it is. And
Yeah.
looking
And
into the future
uh,
and not looking too much into the past. Because if you look too much into the past, and let's say how much you lost on this setup or the second setup, the third setup, and you're not looking into the future of how much margin and how much capital you have left to recover, and that's when you get lost into your trades, I think.
yeah, and I think yesterday we announced our July product release, but we're gonna
Yeah.
have some really cool stuff that could be very, very helpful for people that do not necessarily that day trade. We're creating some longer term models, some more volatility models. So yeah, that should help a lot of users that are looking more at a swing play and not just like a day trade, because day trade can get like very dangerous if you don't know how to manage the risk. So
Yeah.
so you need to really have like a very good setup, a very good emotional kind of like control, because it can get very dangerous.
Yeah. And don't be multitasking when you're day trading too much either. Because I've been there too, where I had the 9 to 5 at the corporate job and I was trying to day trade.
Yeah.
Where I found that whenever I had, let's say, because for me my job was a little more flexible, so I was able to, because I was always multitasking, I was always in the charts, I was always involved in the charts since I was 18 years old. But I always found that whenever I was trying to rush and I had other commitments or a meeting coming up and I tried to rush a trade and I put my stop and I came back from the meeting and it took out my stop because my analysis and my focus wasn't there. And that's the key with trading. You have to be completely there. And you can't just put in a gamble. Sure, I had my stop loss set in, but it was a very risky trade, too much margin.
Yeah, and
And
I think also like a good lesson is that you don't need to do a lot of trades to be profitable, right?
no,
Like
not at all.
do like a few a day or something like that.
Yeah. I always feel most fulfilled once I'm done early. Then I
Yeah.
look into the future of the things I can do. Sure, like when I'm done early, I don't make the most money, but I look at freedom more so than how much money I make. So
Yeah.
of course the market can keep going, keep trending the other way, but hits my target and consolidates for too long, then I'm out and I'm happy with that.
Yeah.
And it's getting over that FOMO factor. Let's look at the SPX. Let's look at the SPX since you were talking about it, Fabio. Yeah.
Right.
Yeah, market not doing much right now. It's probably waiting for the news to come out. But we do have some S&P PMI. Once that hits the tape, yeah, we're definitely gonna see a bit of a push. But the market's definitely waiting for ISM. Yeah, I think we have a lot of news coming up. We got Jolts tomorrow.
Yeah.
then our good friend Jay Powell. Oh my goodness. Why is Jay Powell speaking at that time? He's speaking right on New York Open. That's crazy. You don't see that too often where a good friend Jay Powell is speaking right on Open. That will be interesting.
Is it open or is it 10:30?
It's at Open. Well, it's a 9:30 Eastern, so it's open, which is crazy.
All right.
And then we have Jolts a half an hour after. So tomorrow will be exciting.
Okay. Yeah, that's good.
Yeah. So yeah, we have a lot of news this week. Then we got more ISM services coming out, PMI. We got FOMC minutes. Oh yeah,
It's gonna be a busy week.
beautiful.
Yeah.
And as us day traders, we love the volatility. Love it. Especially when you trade long enough and you're able to put yourself on the right side. Oh, it's the best. You want that volatility. And we've been getting nice moves, and I don't know why people keep saying that summer months are terrible months to trade. I really don't understand that, Fabio. Like, sure, like okay, individual stocks, penny stocks, medium, even some high cap stocks, market cap stocks, it would make sense.
But this
When
week
you
is
look at
a short week for the US, so probably
true, short week, yeah. But when you look at indices, man, like July and August are like one of the best months to trade. We get so much price action. Like I don't understand when people say that. Like individual stocks, okay, sure. There's some stocks that die out and they come back later in the fall, but S&P and Nasdaq, especially the Dow Jones, like, oh man, we sometimes get the best moves during the summer. What's going?
So I think
Sell
we'll
off.
keep you for another 4 minutes.
Yeah, sure.
After you would probably have to trade. So I don't know if you guys have any last questions for Steve.
Yeah. So far, like I set some alerts, we haven't hit them yet, and we're just calm and we're relaxed, not rushing into the market. Let's look at the ES. Yeah, we're just waiting now. VIX is not really doing anything. VIX is still up though, about 3.5% for the day. Stocks, Tesla up. Ooh, Tesla up close to 4%. Tesla broke the Friday highs, looking strong. Nvidia, yeah, Nvidia's been weak lately. I bet you, but it's gonna about to break the lows here. Meta already broke the lows, looking weak. Amazon's trending down. Yeah, Google. Yeah, majority of the stocks in the Meg 7 are in the green, but Apple's recovering. So yeah, there's a mix in the top 7. So it's tough to read the Meg 7 when it's about like 50-50. Bullish, bearish. But yeah, Tesla's definitely the strongest. And there's no surprise. Zoom out. Tesla, yeah, it broke. Yeah, it broke the weekly highs. It's making its little rebound. But it's no surprise. Tesla's been going down for a while. It would make sense for a small recovery. Okay. S&P, Nasdaq, still in the range. Nothing going on. Nothing going on. We get some news in about 2 minutes. VIX is still below its levels. And now we be patient, Fabio.
That's good. Patience is good.
And that's it. Yeah.
All right. Okay. So I think we don't have any other questions. Again, thank you for your time, Steve. And
yeah, of course.
see you back in the room. And thank you guys for joining. Hope this was helpful, and we'll do more of those. And have a great Monday.
Excellent. Sounds good. Thanks, everyone. Thanks, Fabio.